Okay, we're making another video. I'm gonna put this blind down because lighting behind me is not fucking optimal. Not that I'm making this video to see my fat head anyway. But yeah. Alright. This video we're gonna go over. Welcome back, guys. This video we're going to go over oil and its price movements in late business cycle conditions. Because last video I was talking about how the spike of oil can be seen as a negative thing in terms of inducing a recession or something that's common around times that we have recessions. However, oil can spike in early business cycle conditions or when the market's in the early stages of the business cycle, and it's not necessarily a negative thing. It's only when oil spikes towards the end of a business cycle that it shows signs that we are heading towards a recession and a reset of the business cycle. So what I've got here is the chart I brought up last video. Credit to Benjamin Cowan again. But on this chart, which depicts the business cycle very well, because it's the S&P divided by the unemployment rate squared, multiplied by interest rates, multiplied by the year-on-year interest rates, and normalized by the money supply. And what we have here is in these grey shaded regions is past recessions. And the blue line is oil. Now what we can see here, we'll go through each recession. In 1990, we have a big spike of oil. And during this big oil spike marks the beginning of the recession. Not only that, we can see that the chart is falling down as we come to the end of the business cycle down here. Then again in this recession, starting from this business cycle in 1992, oil starts its spike, or its run I guess you could say, in 1998. So this is less of a short and sharp kind of euphoric spike. It's more of a prolonged increase, but oil still has this spike and this sharp drop off coming into the recession and the end of the business cycle in 2001. Now this one is clear again in the 2008 financial crisis. We have oil starting to spike in 2007, early 2007, spiking up, euphoric top, inducing us into a recession as we come into the end of the business cycle. All right, now COVID, a bit of an outlier, as I was we won't go there anyway. And then for currently, where we are now. Okay, so we can see this business cycle started in 2020 as the COVID recession induced us. The COVID induced us into a recession and marked the end of the business cycle. And it's now 2026. So it's been just over 6 years we've been in this business cycle. And through this, right, this is better, we can see oil is starting to spike. In this region here, oil is really starting to spike as we are heading into the end of the business cycle. So I think with this in mind, and it's not for certain, we are looking like we are heading in towards a recession. And this is the point I was wanting to clarify in this video, is oil spiking in early business cycle environments can just be because of demand reasons. But oil spiking in late business cycle environments is often signs of a recession being on the cards in the future and the possibility that we are coming to the end of the business cycle, as all business cycles end with a recession. Now, something else very interesting I thought I'd show you on the gold chart is here I've got gold's price movements in 1979, 1980, 1981. Right? Now, in 1979 was the Iranian revolution, the Iran War. And as we can see, let's see if I can get is there a tool that goes zigzaggy? I'm sure there is. We can just draw it. Gold goes up, comes down, comes up again, makes a smaller high, lower high, and trickles down as we actually go into a recession in the early 1980s. And the reason I'm bringing this up now is because the US is currently in a war with Iran. And this is how gold moved around that period when the Iranian Revolution was occurring. Now, if we come to where gold is currently, as you can see, we have had this big blow off top. Oh, let's redo that line, that was horrible. We've had this big blow off top. So we've had our run up, big blow off top. We've come down, we've made a lower high, and we're starting to come down again. Obviously, not an exact replica, but as you can see, it is close enough. Our blow off top was less sustained this time. Well, if this is the case, it will be less sustained, as it was merely just a wick in the week of the 26th of Jan. And as we can see, we've come up, we've made a lower high, and now we're starting to come back down as the Iran war, or the war between the US and Iran, is starting to pick up speed. Now, what's even more interesting, if you come down here, right? Now, this chart doesn't go back as far as the 1979, but it starts at 1980. Oil had spiked prior to this Iranian war, the Iran war in 1979. And as we come down, we are induced into a recession in 1981, which is, if we can come all the way back here, what happened to gold? Shot up, Iran war, pulled back, lower high, and fizzled down through the recession. Late business cycle environment, oil spiking in 1979, coming down. The war reaches a climax. Actually, I'm not too clued up on the war back then, but the war ends and it comes down. The business cycle ends with a recession. So, with that in mind, and the conditions we are in currently, as we can see, put that there. We've had our big spike from oil. We're in a late business cycle environment. As you can see, the Fed has been trying to have a soft landing and bring us down into the end of this business cycle, but it's not looking like it's going to be a soft landing, considering we have a lot of geopolitical tension currently. This tells me it is likely we're coming in to a recession. And what did gold do last Iran war that ended with a recession? Made a high, blow off top, made a lower high, and continued down before trading sideways for a fair period of time, and then ultimately running again. So where does this bring us to now? And obviously this can all be wrong, right? But where it brings us to now, we've come up, made our blow off top, we've wicked high, come back down, made a lower high, and now we're trading down as the current war picks up. And it looks like we're heading into a recession. You can't deny how similar these market conditions look. Obviously, there's no guarantees. This analysis could be completely wrong. But oil spiking is not necessarily a bearish thing, but oil spiking in a late business cycle environment with geopolitical tensions is definitely the sign that we are coming to the end of a business cycle, in my opinion. So that's where it leads us now. I think what you can do, and what I'm looking to do, is keep some money in cash. Definitely not going to jump in to the likes of the US stock market, and just kind of sit on my hands, not panic, and just watch where this goes, because it will recover, right? And silver is definitely starting to pull back, having a very similar pattern to the gold price in 1979 to 1981. So yeah, that's just where my head's at. I just wanted to kind of clarify a few things, make another video, try and keep some consistency with this. But yeah, to summarize, oil spiking in late business cycle environments can be signs of a recession. And I just wanted to draw the similarities between the current war between US and Iran and the war in 1979 between US and Iran. Yeah. Anyway, thanks guys. Another thing added to the journal. All the best. Cheers.